See, the people that own assets, they benefited when the stimulus checks and all the PP loans and all the low interest stuff, when they were trying to get everybody to spend, it just made the value of the assets increase, putting ultimately more money into the pockets of wealthy people, because wealthy people tend to own most of the assets that benefited from this increase in prices. Think about the stock market. The government was doing back then what they call quantitative easing, which is just where the government lowers the Fed funds rate and increases the money supply and makes a lot of liquidity in the markets, right? That's all that quantitative easing means. But these low interest rates, they tend to drive stock prices higher. Remember, we talked about that last week too. Low interest rates usually drive stock prices up, which who do you think really benefits when stock prices go up? Wealthy people who hold large portfolios, and their $2 million portfolio goes to $4 million because the government injected money into the economy. Low interest rates drove stock prices up. When you drive stock prices up, you drive up the amount of wealth in the people who own most of the stocks, or own many of the stocks. This is why, if you're in this chat right here and you've owned stocks and real estate over the last 2 or 3 years, 3 or 4 years, I would be willing to bet you that you've seen your net worth double in the last 3 to 4 to 5 years. Your net worth has probably doubled. Why? Because you are participating in the markets. And the people whose wealth increases is the people who are upper middle class, rich, wealthy, whatever you want to call them. And we really don't talk about this enough. We take that off. We really don't talk about this enough, right? But that's what makes the gap. Listen, the people that own a bunch of real estate and own a bunch of stocks over the last 3 or 4 years, they're not the people that is really complaining about these increases that we've seen over the last 5 years, 3 or 4 years, right? It's the people who are poor, who cannot afford eggs and milk and bread the way they could afford eggs and milk and bread 3 or 4 years ago. Because the wealthy get wealthier when the government injects money into the hands of the poorest people. Think about, as I mentioned, asset inflation. Think about real estate. Think about what happened to the price of real estate. If you own a home and you're here watching this, your home was $300,000 in 2020. That was the market value. Today, that home is $475,000 or $500,000. Why is that? It's because the federal government said, we're going to help out everybody, and we're going to put money in the hands of all the people, stimulus checks. So understand that in America, when the government helps the poor, the government also is helping the rich. Not to mention something as small as wealthy people often have a little bit better access to different investment portfolios and different investment opportunities, different investment advice, you name it. So when policies like low interest rates are introduced into the economy, like we're going to see here in the next year or so, who's taking advantage of borrowing cheap?